Well, welcome back to Finance Uncut. On today's episode, how $68,000 in silver bought me 6 homes. If you haven't yet watched my last video, Wealth Cycles, I'll put a link in the description below. I highly recommend you watch it, especially if you're a silver or a gold investor. If you're an investor in general, you want to know about wealth cycles and the power of it. You don't have to follow it, but in this video, I shared my story and what exactly is a wealth cycle and why I believe that we are entering another wealth cycle and why I'm playing that again. But basically, to summarize it, in 2008, 09, I bought silver at like 10, 12, 13, 14, $16, about $68,000 worth of silver is what I bought back then in 08, 09. And then in 2011, at the beginning of 2011, a man came to my office and had this prospectus and was selling investments in real estate in Detroit in the United States. And some of these properties were like 10, 15, 20, $30,000 and returning gross yields of 25, 30% gross yields. And look, on paper it looked great. However, I knew just from the limited knowledge that I had that Detroit was let's just say not going so well, and so I was skeptical about buying. I spoke to a few colleagues. They put me onto another colleague of mine who happened to buy and own a bunch of US real estate, and so I met with him, went through his stories. He bought in the wrong areas, he had issues, blah blah blah, and so I learned from him. And so, I started selling my silver in 2011. I was convinced that, US property had fallen quite a lot. And in areas that I bought in Atlanta and Memphis, properties were dirt cheap. My first property I bought was $29,000, a 3-bedroom, 2-bath townhome in Hamptons in south of Atlanta. And so I started selling my silver in early 2011 for $43, $44, and $46 from memory. And I sold it all for about $232,000. So from $68,000 to $232,000. But then the exchange rate at the time was $1.04 between the Australian dollar and the US dollar. So I actually ended up, by the time I sent that currency over to the US to my Wells Fargo account, I had $241,000, where I used those funds to buy 6 properties for cash in Atlanta and Memphis. And now the properties in Atlanta are worth around $115,000, some a little bit more, some a little bit less, and my Memphis properties are probably worth around $75,000. So all up, those assets are worth about $788,000 today. I have in previous videos shared that I've been selling these properties into this property market, bull market. Some may think I'm crazy, but when I bought these properties for $29,000 and I'm able to sell them for $115,000, and the dollar was $1.04. Now the dollar is 76 US cents. So it makes sense for me. So I did that, and I'm doing it all over again. I believe that we're going into an inflationary environment, and that we are going to see something similar occur. I think asset prices, whether it's real estate, stocks, especially bonds, cryptos, are all in a bubble. The only thing that's not in a bubble is commodities, and in particular precious metals. And so I do think at some point we're going to see asset prices have a significant correction. And I think in the same breath that commodities and precious metals in particular have got a long way to run. Now, you can never catch the top and the bottom of these wealth cycles, so you don't even bother trying. I got a little bit lucky, I must say, because if that Scottish man didn't come see me in my office back in 2011, maybe I don't sell that silver. Maybe I hold on to it, because I didn't really understand what wealth cycles were back then. So I kind of found out through, I guess, through a bit of luck. But I believe that we're going through that again, and I think I've also found a lot of great commodity and precious metal miners and explorers that are severely undervalued, and I think I can, and I've had success in that field before, and I think I can get that success again. So I'm certainly using that wealth cycles now. But why else am I buying, especially silver? Why am I buying silver more than gold at the moment? Well, I know this is old news, but the US Mint has said that there is a global silver shortage. And I had to share, on the back of that, I had to share this this little picture that's been going around on social media with the global silver shortage and the US Mint. And then you got Jeff Christian, the Perth Mint, the LBMA, Jeff Curry. Silver still in the ground. Got to have a bit of a laugh, don't we? But what's interesting, when you look at the annual world silver mine supply versus global net silver physical and ETF investment demand, have a look at 2020. You can see that the demand, the investment demand versus the mine supply minus investment, you can see the demand for silver investment is so high, 73%. And have a look at up to March. So albeit this is a little bit old, this chart, but we're tracking 71% at the moment. So this is I've never seen these sort of numbers before. The demand for silver as an investment versus the amount of silver that's being mined. So it's very clear that there is silver suppression, that there is manipulation going on in the silver market. With this amount of demand versus the amount of supply, you look at other commodities that have had tremendous runs in the last 12 months. And silver's done okay. Silver's done well from its bottom in March, but it should be much, much higher based on the numbers. And actually, when we look at this in particular, the big 8 traders that are short 168 days of world silver production. So the big 8 traders are short 392 million ounces, which actually is 110% the commercial short position. So what's that mean? That's naked shorting, surely. So the big 8 are short 43% of the entire silver futures market. So they're obscenely short silver in particular, but actually the main precious metals, you can say the same thing about platinum and gold as well, but silver in particular, which is, I don't know, I find this very very interesting indeed. So I found this chart very interesting as well. By the way, in June, 5 US banks increased their short positions by 3,200 contracts to 39,500 silver future contracts. But we've got 28 banks, both US and foreign, a net short 32.3% of the comex, which, to be honest, in June, so that is down from 35.7% in May. So 35.7% in May, now 32.3%. But you can see in the amount of contracts that are held short or held long between the US and non-US banks futures contracts. So there's only a couple of times prior where there's been more short positions. And some people might say, well, Steve, why would you invest in something that's manipulated and short so much? Well, when it breaks, it's like a rubber band. It's been stretched down so much that when it breaks, it's going to really shoot the other way. And I would rather have something that is artificially manipulated lower, because when that breaks, it's obviously going higher, than have something that's artificially pushed higher, because when that breaks, it's obviously going to fall. Obviously, that will present short opportunities, which we've had some success in as well. But also, I shared this in a previous video, that even Mr. Christian, his CPM group, said that the silver price could reach $50 again. And if he's saying that, I would say it's going much higher than that, because, well, I'm not going to say too much. I'll leave you guys to discuss that in the comments below about Mr. Christian and the CPM group and his whole analysis on the silver market. But let's say he's not the most bullish guy on silver, and he's saying silver can hit $50. Now, I'm sure many of you have seen this before, but in 1964, the minimum wage was 5 90% silver quarters. In 2021, 5 90% silver quarters have a melt value of $23.34. We don't need minimum wages. We need sound money. Absolutely. Absolutely. From someone who's an Austrian economist and believes in sound money. Yeah, I love this. Now, I've shared this in previous videos as well. One of the other reasons why I am buying silver and I own quite a lot of gold is I do expect the market, in particular the stock market, to have a serious correction. And I don't know when. It definitely feels like sooner rather than later, but I mean, this could drag out for another 6 months or so before it actually does. But this is that whole wealth cycle thing. So, when those markets do crash, gold and even silver, even though silver on the right, you can see that it did fall, it fell a lot less than the stock market during these periods. So actually you gained more, I guess, purchasing power in terms of the amount of stock that you could own, the amount of the S&P 500 that you could own. And so this is another reason why I'm investing in this asset class at the moment. And just finally, let's remember the economic system that we've been under. We've been under a Keynesian economic model. Austrian economics got pushed from the mainstream, and I could talk about that and talk about how Keynes in the 1930s was able to get his theory across and became very popular, and why Hayek himself didn't debate it. Hayek actually said he didn't debate it because he thought his general theory, that is Keynes's general theory, because Keynes just changed his mind so often that he thought it wasn't worth the time, because it was so bad that he would change his mind again. So there was no point debating it. However, he didn't change his mind, and governments and central planners around the world picked up on that economic model. But Hayek said this about Keynes: he was a man with many ideas who knew very little about economics. He knew nothing but Marshallian economics. He was completely unaware of what was going on elsewhere. He even knew very little about the 19th century economic history. His interests were very largely guided by aesthetic appeal, and he hated the 19th century and therefore knew very little about it, even about its scientific literature. And it's just a shame, but it seems like we are moving into a post-Keynesian world, into an MMT world, chartalism world. I shared that in my video, a couple of videos last week, where I talked about inflation could hit 20%. I talked about how fiscal, we've moved from monetary dominance to fiscal dominance, and this whole idea of MMT, which seems to have captured many politicians, many in the media, and that seems to be the movement we're going. And many central bankers are now starting to embrace it as well, I guess, as a way to hold on to power. I can't think of any other reason why, but anyway, so that's why I am owning silver, buying silver, because I think we've moved into a new paradigm, economic paradigm of MMT. I think we're going to have significant currency debasement. We've got two options: either we default on the debt or we default on the currency. I don't see politicians and central planners defaulting on the debt because they'll be thrown out of power. They will default on the currency by devaluing the currency, and therefore gold and silver is a no-brainer and commodities is a no-brainer, in my opinion. Not giving investment advice. This is in my opinion, and I've used this wealth cycles before, and I'm doing it all over again. Anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. Don't forget to hit that like button, and if you haven't yet subscribed, do so, and hit that notification bell. Take care, everyone, and I'll see you again on another episode of Finance Uncut.